What's going on, guys? How are you? I hope you've been having a good week so far. It's still Monday, but yeah, I hope you enjoyed your weekend. So welcome back to the channel. Today we're talking about the video you guys requested, the video about stop losses and take profits. So let's just say we're talking about targets today. So this thing of targets, this thing of stop loss works like this. It depends with the method you are going to be using when you're trading. So in basic terms, we are saying the same reason that got you in a trade is the same reason that will get you out in a trade. So I'm going to be explaining that in this video. And guys, I just want to welcome those ones who are new to this channel. Welcome, guys. This is a channel for smart man traders, ICT. Everything you need to know about forex, everything you need to know about institutional trading. So if that is something that appeals to you, that you're looking forward to learn, or you're looking forward to explore, just click that subscribe button. It's red, by the way, and turn on your post notifications so that you don't miss any video content from this channel. So today we are going to talk about stop losses and take profits. So what we are going to do is we are first going to kind of explain the context. When I say context, I mean or in simple terms, in layman's terms, context is equals to strategy. So I mean, we're first going to explain the entry reason, then we are going to explain how you would set your targets depending on the entry reasons I'll be giving you guys. So if you are clever, I know you are all clever, guys. So what we are going to do is we're just going to use the same reasoning to apply to the strategy which you use if you don't use my strategies on this channel. So if you don't, please just find one and use it. And guys, if you don't have a Deriv account, just look in the description down below, create an account and trade these indices. They're not hard to trade, they are kind of straightforward. So I would recommend for you to have an account and actually trade these indices. So what I'm going to show you here applies to indices, these ones, and forex, currency pairs, and everything that can be represented on a candlestick chart. You can be trading sugar, you can be using this trading coffee, you can trade stocks, anything, guys. So number one, well, obviously you guessed it, we're going to explain how you set your stop loss and your take profits using market structure and order blocks, right? So let's look at this chart which you see here. What we have here is we have this market structure going down right here, market structure going down. So this is a downtrend essentially. So if we mark it like this, this is a clear downtrend, as you can see. So what we are doing here is we are only marking the highs. So this is what we say: lower high, lower high, lower high, lower high. Why? Because it's a downtrend. Then when the market breaks a high like this, takes a high, what do we call this? We call it a break of structure. BOS, BMS, it depends with what you want to use, or the terminology you want to use. So let's say this is a break of structure. So right now I'm explaining the context, the reasons to the trade. Then after the reasons, I'll explain why we would put our targets at the places I'll be showing you, right? So we break this is a break. Then after that, what are we doing? We are marking this as the what? As the order block, right? Let's look at this order block, right? So first of all, we want to understand the context, or want to understand the reasons to enter this trade. So if you look at this chart, you clearly see that we have the peak here, where I just mean the origin of the move. So the move started here, that's number one, took out what structure, that's number two, as you can see from this one. So it took out structure, and the order block that was responsible for that was this order block here, because it took out with this move. Then it created another low, took it out with this order block, right? So what happens here is this: when price is going back to retest this yellow zone, which is this order block you see right here, we are going to enter our trade using two methods. First of all, we can be using a pending order right here, where we just put a pending order at the beginning of the order block, and our stop loss. So remember, we're talking about stop loss. Our stop loss is going to go where we think the setup is going to be invalid. So if you're trading with an order block, guys, you are expecting an order block to be retested, not to be broken, right? So if you are trading a retest, so every strategy which is a retest, guys, the moment where you are having a breakout is the moment you are going to invalidate that particular setup. Okay, let me repeat that. What I'm saying is, this is the order block, the yellow zone. So the yellow zone starts here and the order block ends here. So this is the zone we are expecting price to react from, right? So when price comes, or when price retraces back to the yellow zone, as you can see from this diagram, we are saying price is supposed to bounce back from the yellow zone and sell, right? That's our setup. So when we were fashioning this setup before price got here, you'll be thinking, if price gets here, I want it to bounce off at the beginning of the order block. That's the ideal scenario, right? So this setup, this kind of setup, is going to be considered invalid when price shoots through the order block, when price breaks the order block. So we are saying whenever price trades above this line above here, the setup is invalid. So what are you going to do? You are going to put your stop loss at the point where you think the setup is going to be invalid. So the setup is going to be invalid at that purple line, this line at the top. So you are going maybe to factor in a spread, the spread of the instrument you are going to be trading. So you are going just to add the spread here, and maybe you'll be having something like this as your stop loss. So this is the scenario which you can use if you are trading supply and demand, if you are trading order blocks, if you are trading break and retest strategies, and this is how you do it. So I've just explained how you trade zones and how you set your stop losses and your targets using these zones. So I will be explaining again how you trade using these order blocks, or how you set your targets in terms of take profits and everything using this same zone trading mechanism. So now I'm going to show you how to set your stop losses if you are using something similar or identical to what we call M's and W's, what we call double tops, double bottoms. So this is how you're going to do it. Let me show you an example of a double top and see what we can be doing. So real quick, let me just show you. Today is a Monday, and this is V25. As you can see, price is reacting to the order block right here. So we can be selling at this point, and our stop loss, where is it going to be? It's going to be here above the order block. So this is what we are saying. This is a sell, and some of us who know this order block trading thing would have entered here, right here, and our stop loss would have been here, and right now we would have been in profit. So this is zone trading. Let me explain to you what you do when you're trading M's and W's. This is an M. So this is the M5 and this is an M, as you can see. So let's go to M1 and try to see if we have a perfect M. Perfect. So this is what we are doing. So an M is something which looks like this. I think most of you guys know how to trade this thing. So what you are doing is you are waiting for the M to take shape so that you can enter. So this would have been your entry. So the moment you are going to consider this setup invalid is the moment where this ceases to be an M. Do you understand? We are entering using an M, but when you consider this setup invalid, it means the M which you used to enter your trade is no longer there. So what kind of a scenario or what kind of a pattern would that be? What we would be having for us to consider this invalid? Obviously, we'll be having price moving beyond this one, beyond this point. Why? Because you're saying this is the highest point of the M, and when price shoots and breaks these 2 points, this anchor. So an M is an anchor. So when price breaks that anchor, it means it's not an M anymore. It's not the same setup which you used or which you saw when you entered your trade. So the setup has changed, and thus you were wrong. So guys, we just have to understand that sometimes we are wrong. Sometimes we don't get what I'm saying is you just have to understand you are not using a holy grail. You are using a strategy that is based on probabilities. So when this setup is invalidated, that point when you see price trading at a certain point, that's your stop loss. That's where you put your stop loss. You are just accepting that you were wrong. You are human after all. So that's what you are doing. I know most of you guys don't trade using with stop losses because you think the broker is trading against you or something like that. But guys, just use stop loss because every setup can fail, and you know where the setup is going to fail, and you know what it looks like when it has failed. So you just put your stop loss at that particular point. So that's how you use our stop losses on zones and M's and W's. Now I'm going to explain to you how to set your take profits. So we are going to start with zone trading. As you know guys, I integrate zone trading and market structure. So what I do is I first look at market structure, then integrate that market structure with what? With zone trading. So what I do is I look at what price is doing. So price can be going lower high, lower low, lower high, lower low, or lower or higher low, higher high, higher low, higher high. That's market structure. So what you are doing is you are using that to set your what? To set your targets. Look at this. Look at this. Let's say this is your zone. You are selling here. This first low is going to be what? It's going to be your target. Why? Because you are saying yes, we had what? Shifting market structure here. The market is changing. We are now being presented with what? With lower highs. So as we are being presented with lower highs, like in this case, so this is the confirmation break of structure, then this is the what? This is the retest of an order block of a zone. So you know where the stop loss is going to be, but now you see this low, and with market structure you will see that this is a lower high, then price moves, takes out this, forms a lower low, and price comes back. So you know when price is trading from this point, it's going to form what we call a lower low, another lower low that is going to take out this particular low you see here. So you will never see these lows again. So what we are going to do here is, this is the low. So you are saying price is going to go beyond this low. So your safest take profit is going to be at this low, because you're saying price is going to shoot through it. So you will be safe if you trade or if you put your stop loss at this particular point, because you know price is going through it, and at this point, let's say we enter here, this will be your safest what? Take profit, because you know price is going to go through it. So for it to go through it, it has to go, or it has to get there. So if your take profit is there, you are going to be paid at that particular what? At that particular point. So that's for what? That's for take profits. So using market structure. So with this you can even use any strategy, but using just lows and highs. So my argument is you can be using lows and highs to what? To set your what? To set your take profits. So let's just mark the highs on this chart. High. So this will be your take profit if you traded from this range. This is another take profit range, another take profit range. If you are going down, so if you are going down, let's say this is a take profit, this is a take profit, this is a take profit, using market structure. So let's look at take profits using order blocks. So yes, order blocks can be also used to set take profits. Let's look at this point, or let's go to, so let's say we are looking to buy. So with this market structure we're looking for buys. So in our VIP signal group we are going to be looking at this tomorrow, and I'm going to send this also to our students chat group so that we can have a conversation about this setup. So then is we have this anchor, right? Then we have this break of structure, number one. Then what are we looking for? We're looking at price coming back to this zone and going up. So what is our target? What is our take profit? This is where we're going to enter. So what is the take profit? We're just going to look at the order blocks in the opposite direction. Let's use a different color. Let's use a different color. So blue, that is going to be what? Your targets. So you see, we're just using the order blocks here. We're just using the order blocks to target. So what you're going to do, if you enter here, your first take profit is going to be this one, and your second take profit this one, your third take profit this one. That is what you are going to be using to what? To trade. And this is how you look at stop losses and take profits in a nutshell. I hope this was helpful, guys. Have a wonderful week. I wish you nothing but the best. Trade what you see. This is Shocks, and I'm out.